Good morning. I'm Goro Keita. Today is July 2026, and the markets are sending mixed signals. While IHSG shows a modest bullish bounce, the real story is the AI rout triggered by China's DeepSeek, sending Nvidia down to an AM and dragging the Nasdaq. Meanwhile, crypto is stagnant, and a quiet but critical debate is brewing over GitHub, potentially hiding open source behind a login wall. Let's dissect what this means for your portfolio and the tech landscape. The next layer changes everything. I'm Goro Keita, independent analyst. I don't give financial advice, but I do provide objective, data-driven analysis. Today, we're connecting dots between macro, crypto, and tech news that most outlets miss. If you want to understand the forces shaping markets, stay tuned. What most people miss is simple. Let's start with IHSG. The index closed at 5916, up 0.6% on volume of 1.7 million. That's a bullish tick. But context matters. This is a dead cat bounce within a longer-term downtrend. Indonesia's market is still under pressure from global risk aversion and a weakening rupiah. The 6,000 level remains a psychological resistance. Without a catalyst, this rally is fragile. Seen from another angle, the problem shifts. Macro headwinds are intensifying. Gold fell to empat, silver dropped due a Lima, and the Wall Street Journal reports a broad AI rout. This is a classic risk-off rotation. Investors are fleeing tech and precious metals into cash or bonds. The DeepSeek panic is a symptom of a deeper fear that AI spending may not yield proportional returns. If the AI bubble deflates, emerging markets like Indonesia will suffer capital outflows. The consequence becomes clearer here. But is the panic overblown? Wall Street Journal argues that DeepSeek won't sink US AI titans. I agree. DeepSeek is a Chinese competitor, but US companies still dominate in software and ecosystem. The sell-off is emotional, not fundamental. However, the volatility creates opportunities for long-term investors. The key is to separate signal from noise. Behind this signal, a larger pressure builds. Now, crypto. Bitcoin is flat at $63.766, up 0.00 Ethereum, Ripple, Solana, and Binance Coin are all down. The market is listless, lacking a catalyst. The DeepSeek rout didn't trigger a crypto sell-off, which suggests crypto is decoupling from tech stocks. But that's not necessarily bullish. It could mean crypto is in its own low liquidity winter. The next step narrows the search. Stablecoins are diverging. Dune data shows USDT dominates payments, while USDC leads in DeFi. This is a strategic shift. USDT is the go-to for remittances and merchant settlements, while USDC is preferred for lending and yield farming. For investors, this means the stablecoin market is maturing into specialized roles. Watch for regulatory implications. At this stage, the pattern breaks. Kraken won a dua arbitration against former auditor Mazars. This is a big deal for crypto accountability. Mazars was supposed to provide proof of reserves audits after FTX. Their failure to detect issues led to this ruling. It sets a precedent that auditors can be held liable for negligence. This could force better practices across the industry. What makes this matter is key. Let's move to tech news. Microsoft is cutting AI costs by relying more on its own models. This is a strategic pivot. Instead of paying OpenAI for every API call, Microsoft is developing in-house alternatives. This could reduce dependency on external providers and improve margins. But it also signals that AI monetization is harder than expected. Finally, the clues point to the question. Discord admitted an AI moderation bug wrongfully banned due to null users over harmless images. This is a cautionary tale about over-reliance on AI. The bug had been active since May. It shows that AI moderation is still immature. For companies deploying AI, this is a reminder to have human oversight. For users, it's a privacy and fairness concern. Look at the first clue. Google's Pixel event is set for August 2. This is a routine hardware launch, but it matters because Google is doubling down on on-device AI. The Pixel line is a showcase for Google's AI capabilities. If they can deliver compelling features, it could pressure Apple. But the market is saturated, so differentiation is key. The next layer changes everything. Now, the GitHub radar. First up, Tiga Tiga, an autonomous red teaming platform with 191 stars. This is a multi-agent offensive security tool. It automates penetration testing using AI agents. For cybersecurity, this is a game changer. It means faster vulnerability discovery, but also raises the bar for defenders. Expect more adoption in DevSecOps. What most people miss is simple. Second, Open Science, an AI workbench for scientific research with 272 stars. This tool aims to democratize AI in research. It provides a platform for data analysis, model training, and collaboration. For the scientific community, this could accelerate discoveries. It's a sign that AI is moving beyond tech into verticals like biology and chemistry. Seen from another angle, the problem shifts. Finally, a critical discussion. Is GitHub preparing to go behind a login wall? A Hacker News post highlights that Stargazer data returns null empat for non-logged-in users. If GitHub follows LinkedIn's model, it would restrict access to registered users. This would hurt open-source discoverability and transparency. For developers, this is a red flag. Microsoft must balance monetization with community trust. The consequence becomes clearer here. To wrap up, today's key themes are AI volatility, crypto stagnation, and infrastructure shifts. The DeepSeek panic is a buying opportunity for the brave, but caution is warranted. GitHub's potential login wall is a long-term concern for open source. Stay informed, stay diversified. If you found this valuable, subscribe for daily briefings. I'm Goro Keita, and I'll see you tomorrow.